Christine, Tomie, the stage is yours.
Yeah, today has been amazing, amazing. And I think as I was thinking through the second half of this, I thought to myself, um, a lot of people would be friends by now, so let's make this casual. And so this is a lot more casual than, the sessions we've had before. I think with the morning session, one of the things that we've looked at in depth and we've talked about, has revolved a lot around personal financial management. I think we also had Tomie really touch into investments, but investments, collaborative investments and all. And I think we've delved into that, quite a lot. But I did plead with her when she got here, and I was like, Tomie, I'm going to have entrepreneurs in the room. And there are these questions, burning questions they always have. Could we just, like two friends, new friends, who have met in a past life, just really be relaxed and talk about entrepreneurship? And then hopefully have the entrepreneurs in the room ask us questions. Again, we'll just touch on, brief entry into it, but then we'll come back to the funding piece because I think that's what most of the women here are looking at. So Tomie, thank you. Thank you so much. I really appreciate everything. We've really had a good time with you and all the amazing speakers. First of all, ladies, thank you. The support is, mwah. I love you all. Thank you. Thank you so much. So we've got a lot of entrepreneurs, and you and I had a conversation about this. I feel like Rwanda is ripe. It's at that point where, women are stepping out a bit more. They want to do things. We're still in the product service side of things. I don't know a lot of tech startups yet, but I know a lot more women here that are doing different aspects that we have here. So I think if you could just give us an idea, like the women that you're working with, and what are some of the things that you're seeing as trends in those spaces, more generally. And then we can then talk about, what are these women looking for when they, when the venture capitalist / the private equity hat, what are you seeing as those trends?
Right. Thank you again, Christine. Thank you and well done. Thank you for having me here. So in terms of entrepreneurship, it's been very interesting for me because I've always come from the lens of an investor, right? So I'm an entrepreneur as well, but then a lot of times when you're looking at pitch decks or when you're analyzing businesses, I always come with the lens of an investor. So, like you said, in the VC space, there's been a lot of focus on tech-focused companies. But even with that, there's a lot of change happening there because we started to see that a lot of valuations there were a lot of bubbles in that space. And then we went through like a funding winter, like they like to say it. And now, even the venture capital companies and angel investors, and also understanding that, just realizing as well that we need to build the real sector. I think there's no easier way to say it. There's a lot of opportunity in the real sector. And we also need to enable that in terms of investing, in terms of investment readiness, building investment readiness as a company, and also capacity building. Now, you don't always have to seek funding. I think that's another wrong, I wouldn't say wrong, but something that a lot of people don't realize. You don't necessarily have to seek funding. You can build an amazing business without seeking equity investment immediately. You don't need to get startup funding from the very beginning. But it's also understanding that you have to have the right structures and systems in place for your business. Even if you're not seeking funding, it also protects you. There's so many things that you can bring in terms of structuring your business. And I can share stories for myself as well. Recently I was a facilitator on governance on a cohort because I'm also a Techstars mentor. So I mentor startups in the Techstars space, right? And I've seen quite a lot across Africa and then the US. So I also got to be a mentor on the JP Morgan cohort in Detroit. And one of the things I saw, it was so in my face, was how, they just think big. There's something about being in the US and being in Europe, and they just think big. And I think also building a business in a developed economy works as well, because I'm mentoring a startup, for instance, and I'm asking, okay, what is your plan for growth and scale? How do you want to grow this? And it says, oh, I just signed up a business that has 2,000 stores. I just signed up a business that has 12,000 stores, and my product is going to be sold in 12,000 stores. I'm like, wow, all it takes is just one major partnership, and that's it. But when I speak to companies or startups in the Texas cohort in Lagos, it's like, oh, we have to grow and get 1 million users, or we have to sign up this business and that business. Now, I understand the economic framework, and that's what makes it really different. But even if we think about our economic framework, I think for me the question has always been, how do we ensure that we can build within our economic framework and still think scale from the beginning? Yeah. Thinking scale from the beginning is understanding that you have to build a business that has system and structure. Mm-hmm. That is not about you, right? So I know for me, one of the first things I did was get an advisory board. So I had 2 advisory boards. I had an advisory board with kind of like my peers, and I had one with some of my mentors and my ex-bosses, some of my bosses that I worked with in 9 to 5. I invited them to sit on my board because I knew that they would bring in expertise that I needed at the time. And a lot of the advice they gave me then, honestly, they saved me, right? Ensuring that I had legal counsel on retainer, ensuring that I had legal agreements with all my partners, ensuring that I had processes, I had policies in my business, even though I didn't need them yet. Eventually, I got to need them. I mean, ensuring that I had audited financial statements, ensuring that I had an accountant. Those were things that I didn't have to do. I could have run my business as an informal business. But then they said, Tomie, you have to do this. And I had to hold myself accountable because these are people I respect. And they were giving me their time. I couldn't have afforded to pay them, right? And since they were going to spend their time with me, I had to make sure that I was, taking every bit of advice they were giving me and ensuring that I was implementing it. Yeah. So they would tell me, Tomie, I want you to set up the system in your business, have documented processes. So I had to hire an accountant. And yes, at the time, I couldn't afford a major accountant. But what I did was, I had one of my friends, that's why it's about network, right, who was like a KPMG staff at the time. So I reached out to him and I said, you know what, I'm going to hire a young graduate, but I want you to mentor her in my business. So think about it as you sharing your information as a consultant, but she's in here doing the real work. So I could afford the young graduate, but she was getting oversight from a major person. So all of that was how I thought about building the business. So in terms of what we see now, in terms of trends, for women building businesses is thinking about scale from now. Yeah. So you might not think, oh, I need funding or I need grant. I don't want to bring external people into my business. But it's about how you grow your business, for instance. Are you ready? If someone brings $1 million contract to you now, do you have the systems and structure to take that on? You don't have to wait until you get that. If you're a $10,000 business now, start thinking big, right? Remember what I said about your future self. If your future self is someone who runs $1 million company, how is that company structured? How does that company think? Do I have financial statements? Do I have my monthly, know how I spend money in my business? Is my business a separate entity from me? Is my business paying me a salary? Those were things I had to put in place from the very beginning, ensuring that I had separate books and I wasn't just dipping my hands into the books in my business, right? And then my accountant would come in and then I audited my financial statements. All of that was because I had an advisory board and governance at a level. And then when you also think about how you think about scale, you also have to stretch yourself. So for instance, one of the things I also decided to do was to get regulated. I didn't have to, but it was also me saying I want to take a step in this next direction, right? And with getting regulated comes with very strict compliance requirements. And that also stretched me as well. But I want you to begin to see these things as opportunities to grow in your business. Don't simply say, I don't want to be stressed out. Let me just keep my business small, right? And step out and say, who is doing something big here? How are they structured? What's the system like? And how can I build this and grow from that? So what I would say in terms of trends is, while we're seeing funding change in terms of who they're focused on right now, a lot more of the venture capital funds that I work with, for instance, are more focused on bigger Series A companies. So it's now who's going to fund the small startup companies. That will be more about angel investors. Now, angel investors are also asking the tough questions on governance, your financial statements, your numbers. I see pitch decks every time. I mean, people come to do pitch. We have a pitch first in my angel network. And I want to know about your numbers. I want to know about your customer acquisition cost. I want to know all those things. Don't tell me you're not a financial person. You're running a business. You have to know these things, right? And we're asking tough questions. Why? Because I think 2020, 2021, 2022, we're all excited. We will all just invest. Just come and like, oh, I love this idea. I give $5,000 as an angel investor. I give you $10,000. And now we're saying, no, we're going to ask tougher questions, right? And we're going to ask you the questions that you have, because I want to know if you're someone that I can trust with building a business that is structured and has a system. I may not necessarily be looking for an exit immediately, but I want to see you build a business that maybe bring in, a VC at some point, or get better funding at some point.
So I think we're definitely, venturing into the conversation around the funding, which is a key one. But if, let's say you met a lady today who is probably put her systems in place and, have all of that, what kind of funding opportunities would you recommend? And depending on probably what stage you meet the person at, or like what would you recommend to them? Because I think all of us in the room, one of the things that I hear a lot more is, I need to get some equity investment into this. I need to get, some VC funding into my business to grow it. But I think I'd love us to just talk about the many options there are. And, if we're definitely looking to veer into that VC funding, there are tougher measures. You and I had a lengthy conversation on that, on what's needed. Yeah.
So it does depend on what you do, industry, sector. What problem does your business solve, right? Fundamentally, that's where it starts. That would really determine the right fit of funding for you, right? Or if you even need funding, right? I think that sometimes we just assume that we need funding. If you're not in a capital-intensive business, right, how about making sure you make money from day one? That's another thing a lot of people don't realize. And I'll just give you this example. So I met someone who, he makes this juice. He makes juice, how do I put this down? He just makes juice bottles, right? Or bottles juices, right? And he will sell them, basically he makes them fresh, and he would deliver them to your doorstep. So you could order from him directly. He would, make them fresh in his factory, and then have them delivered to you on a weekly basis. So it was fresh juice delivered to, I think my sister and I, we used to order from him. And then he reached out and said, I want to have a conversation with you. I was like, why? I said, I need funding. I want to buy some equipment in my business. And I said, okay, tell me, how much do you need? And he said, I think I need about 2 or 3 million naira, or that's about $2,000, just to buy some more equipment. He wanted to start refrigerating some things, just start storing some things. And I thought, you know what? You're leaving money on the table. You don't need this money. He says, how? I said, if you walked up to me and asked me to pay you to deliver to my house on a monthly basis, I will pay you in advance. So you are not asking your customers for money. You're simply assuming that you deliver to me first, and then I will pay you. But knowing that I've built a relationship with you, you walked up to me and said, I need you to start paying me in advance on a monthly basis. And you walk up to 3, 4, let's assume you have 10 customers that buy juice worth 50,000 naira from you on a monthly basis. That's 500,000 naira. You have 20, you have 30, that's 1.5 million naira. And that's how you get funding. Because we know you, we built a relationship with you. We've been buying juice from you for like 2 years. You just need to ask. So I made him see that he was leaving money on the table. And I see a lot of entrepreneurs do that as well. You simply assume that, my customer is not going to pay me in advance. They probably will, once they know that you would provide that. So that's just understanding that sometimes you don't have to look to external funders to fund your business. Your customers can fund your business, right? And then depending on if you're capital intensive, right, say you're in tech, you need to hire people, you need to build something, then you think about which investor. Probably start with angel investors, right? Angel investors are accredited investors or HNIs who are willing to write you a check. Because if you get them to believe in that business, now, don't think about an angel investor as someone who just has money. You also have to you have to be more strategic in how you think about your angel investor. So for instance, is this angel investor in this industry, in this space? Can they open doors for me, right? Is this someone that is an expert in energy or in infrastructure, in logistics, in supply chain, agriculture? So beyond them just writing you a check, they can also get involved by ensuring that they open doors for you to more opportunities, to grants, to funding, which is grants, right? A lot of grants bodies that, I know IFC has a capacity building workshop where they provide grants for women in Nigeria, Lagos, I'm not sure if they have here. Mm-hmm. So you see bodies like the World Bank, working with commercial banks to create capacity building workshops and give you some grants, right? That's great. But also ensure that you have people helping you in your business. Now, if they can also fund your business, that's great, right? So they give you a grant, and that helps. So I think I'm mixing it up now. Angel investor, for those that work in capital intensive industries or need money to start something or to buy an asset to start. So an angel investor would write you a check, but like I said, don't just look for people that can write you a check. Also be more strategic about it. Maybe invite them to your advisory board as well, right? Then we move into grants. As women, there's so many entrepreneurship programs, capacity building programs that also provide grants. If you check online, maybe not as much as before because of the US aid and all of the clampdown by Trump, but there are still options, right? Now, moving from grants and angel investors, then we go to territory. Now, not everyone is building a business that can be venture. Can you hear me? And I think that's the harsh reality for a lot of business owners. For you to be a business that is venture backable, you have to be able to 10x your revenue. And that's how it is in the venture space. It's about, can you 10x this money when I invest in the startup? So you have to ask yourself the tough questions. If I take this money, can I 10x this money? If I take $100,000, can I 10x it to $1 million in 2-3 years or even less sometimes? And that's what happens in the VC space. Venture-backed companies scale. They have to scale really fast to provide good returns to their business. It's okay to not want venture money. It's okay, right? We've seen businesses organically over a 5-year period. I was speaking about Mrs. Ipekun. She grew her business up to the point where when she needed debt, she went to the banks. And she had the structure to take on funding. You can also take on debt funding from a bank. You don't have to necessarily give out equity, right? But, banks want to see a business that has systems and structures. It's a business that has audited financial statements, financial discipline, accountants, that has a board, an advisory board. And I tell you, this is for real because one of the businesses that I invested in, the one that had the investment default, taught me a very important lesson because that was not the only business that defaulted. There was another business that we experienced an investment default with. And with that one, what happened was there was a board. So when they were going through a crisis, there was a board that could step in and say to the CEO, step down. Let someone take over and speak to the stakeholders. And I was a stakeholder, and they reached out to me, and we worked out a payment plan. And we handled the crisis well. There was a board. There was someone the CEO would listen to and was accountable to. In this situation, the second situation, there was no board. Great business, great traction, amazing growth in the agriculture space. But we kept trying to reach out to the CEO and other members of management, but I was like, who did they listen to? And I couldn't find anyone. And that was an important lesson for me in terms of governance. So you also need to make sure that you can build, and an advisory board, you don't need more than three people. Right? You don't have to have 10 people or 7 people. There are women in the room that can be members of your advisory board. Christine can be a member of your advisory board. Right? Rebecca can be a member of your advisory board. Right? Telling you how to spend your money, psychology of your business as well. So don't think you have to go for the big wigs. Right? Like I said, I had a peer advisory board, and then I also reach out to my previous bosses as well, people you have relationship with. Get them on your advisory board because they will save you. You don't know everything. You don't get to see your shortcomings. You need them. I don't know how many of you know Femi Otedola is a billionaire in Nigeria, and he wrote a book recently, and I was reading the book, and I was sharing the story about how he lost $1 billion. What happened? He didn't have a board to stop him to say that, have you considered the risk about this investment you're making? What happens if you lose money? How do you mitigate this risk? Because it's not you building a business to avoid risk, it's you mitigating risk. That's how it is in the business. You mitigate risk. What happens if this happens? What happens in this scenario? How do we respond to this? How do we adapt to this if this happens? And that was what he was missing. And he also confirmed that. So at every stage of your business, you need different types of funding. Just rounding this up now. If you're starting off, maybe your customers can fund your business. If you're in an industry or sector, so you don't leave money on the table. Sometimes you just have to ask. Then if you do need funding, angel investors, right? And angel investors can be friends and family, honestly. I've heard businesses where you say, my mom wrote me a check. Your mom is an angel investor. My brother wrote me a check. Your mom is an angel investor. And that's great as well. And some of us, our husbands, right, are angel investors, right? And then grants, maybe not as available like before, but you still find some institutions providing that for women because they understand that women are underrepresented and underfunded. I also say that sometimes women are under-mentored. Right? No, they say over-mentored, underfunded. Yeah, I got that wrong, right? So And then when you move from that space, VC, but like I said, venture-backed business, you have to be ready to 10x at least, right? And you have to be ready for the pressure that comes with reporting to VC funds. They don't play. Why? Because the VC funds are reporting to LPs like us. And they have to give me 10x on my money, right? Because it's a 10-year fund, and you're not going to come back to me and say, oh, you lost the money in 10 years. No. So that's why they put pressure on the businesses to 10x as well. It's a very aggressive world. And I know and I understand not every woman wants to get into that space. That's why if you ask me, I'd rather be on the LP side, honestly, right? And then debt funding from banks. Of course, with banks, some of them might ask for collateral. Now, some of them might have, specific financing options for women where you might not need collateral if you have the right system and structure. A lot of times, you just want to see your bank statements to see that there's a system for when money comes in and how money leaves, expenses, you have books, you have audited financial statements. That helps you a lot more than you realize, right? So I hope that answers your question.
I think I'm just going to do one last question. If you could just give us an example around the VC space of, because there was one point in time, everybody we knew was raising money. And I was like, wait, is there somebody just giving out money and I've missed out? Because I would call this person, I just raised 2 million, another person, another 1.5. So could you just give us some examples of maybe some of the issues that have come up more specifically in those areas, or even examples of what you've experienced? And then I'm just going to open it up for the ladies because I know time is fast spent, just to see if they can ask us questions instead.
Great. So I'll share 2 stories. One as an angel investor, and the other one as in the VC space, right? Yeah. So one of the startups we invested in my angel network reached out to us, great traction. I think at the time he had over 400,000 users on his financial payments app and was growing really fast, great traction, like I said. So we came in at a $2 million valuation, right? My angel network, we syndicated funding, and we came in at a $2 million valuation at the time, and it continued to grow. We got to a $20 million valuation within a space of 18 to 2 months, 2 years. So I remember at the time when I was about to write the check, I was excited about the business, right? I remember I said 2020, 2021, I think it's about 2023, there was just a lot of money being thrown around, and a lot of people are waking up to the fact right now that there was just that bubble, right? There was a lot of funding, and it was a bubble. And so I remember seeing that the founder of Flutterwave, GB, had put in $100,000 in this business. And I thought, oh, okay, if he's here, I want to be here too, right? There's something he's seen as well that maybe he wants to collaborate with the business or something. So we got into the business, and the business continued to grow, and then got to a point where Moneypoint, a major unicorn as well, put in $2 million in this business. I thought, oh, fantastic, really great business. And then he just started to spiral, the founder. He would go on some rant on Twitter, now X, right? Maybe someone complains about the service on his app or something, and he would just respond in a sort of harsh way, taking things personal, not separating himself from his business. We would ask for reports on the business. He wouldn't provide updates. He wouldn't say anything. Now, we knew the business was growing. We could see the numbers. We're seeing investment coming, but he just wasn't holding himself accountable. He just thought, oh, you know what, I'm doing well. I don't need to report to you. And then what happened, the customer started to show him that he can make better decisions, and they all started to move to other apps, right? And then we started to hear stories. We started to hear rumors of him paying himself a crazy salary. I think he was paying himself almost $20,000 on a monthly basis. And you're like, wait, what? How is the business able to afford this? And we started to hear people, top management started to resign as well. All those are red flags. And in all of these things, we'll reach out, and I know we also reach out to other investors asking, are you guys reaching out to this guy? I don't know, we'll reach out. Ask what's going on, but he would never respond. And over time, back to my governance, right, is what is the governance structure in a business before I invest? Who will this person listen to? Who is this founder accountable to? Very simple, but very critical, right? Because sometimes you don't realize it that sometimes you need someone that can just tell you and say, you know what, you need to stop this right now, and you need to probably step down because the investors are asking questions. And, there was just nobody that could do that. And then next thing, we get an email saying he has sold the company. Oh. Yeah, like right off under our feet, it was gone. And then we got an email from the new company. He said, oh, we just acquired this business. And then they took a $20 million valued company and squashed it into $2 million in another company.
Oh.
I don't even know where that company is today, if you ask me. So in my books, I probably just had to write it off. But it was just a great way to, I mean, for me, like I said, lessons. And I always call it school fees. You know, you pay school fees to learn these things because I'm not sure you can learn it without, when you do something with your money. This is not, oh, I'm managing someone else's money. When you manage someone else's money, you just report to them, right? When it's your money, you're like, oh, wow, this is real. This is real. You don't get excited and get carried away with bubbles. So now when you're pitching, I'm like, I wrote an article on LinkedIn just this week to say that a lot of founders don't realize what we're thinking as investors after you pitch to us. You think I'm falling in love with your business idea. No. I've probably seen 2 or 3 other dimensions or other, takes of that business idea. I'm thinking about you. Are you someone I can trust to be accountable? If I give you feedback, will you take it? Do you know your numbers? Who do you listen to? Who's on your board? Do you have a board? Do you have structures? Do you have systems? That's what I'm thinking about. And then right there in that room, I will ask you some triggering questions and I'll see how you respond. If you get off defensive, I'll know you're not the kind of person that will take feedback. And we just had one recently. Major company, they were doing like a major round, Series A round, and they came into the room telling us, oh, we just, we have investors about to put in $20 million. I know that. I think one of my other investors just asked a question, and he just said, I don't think I need to answer that question. We've answered the big investors, and they're fine with it. I was like, oh, well, that's fine. It's my money, it's my check. I walk away, right? And then afterwards, he sent us a message to say that he doesn't think he wants to take money from our angel network. I'm like, wow, the arrogance, right? But trust me, that person is not going to last long in business. It's not, I don't have to see a mirror or something to tell me, you can't last long with that attitude in business. It's not going to work, right? So that's like that's an experience. Now, in the VC space, I'll give an example of, it was like a good or bad story as well. Now, you notice that these businesses are not female-founded businesses, right? I'm really struggling to find a female Now, I have supported female businesses by, one of the things I've done is raise debt funding for them, right? And I've seen great women pay back. But sometimes I wonder, you're such in a hurry to pay back, you're not asking for more. Like, I understand you want to take responsibility and be accountable as a woman. You don't want any debt on your books. But maybe I raised 20, 30 million for you, and you're fine. But guess what? For another business, I've raised 10 billion. And they're asking for more. And I'm like, okay. What exactly is going on? And I see you saying, oh, I'm growing organically. And it's fine, I understand. Not all of us want to take on that whole big thing, but we see that all the time. So the second story, a startup in Ghana. This is by a VC fund, Lofty Inc., that I'm an LP on. And great startup, growing, and you see a lot of this growth in the financial services space because that's like a major growth sector, enabling other sectors. So it's like a infrastructure, the guardrails built in Africa, right? The financial services space. And then this is a startup in Ghana, and I can mention the name of the company because it doesn't exist anymore, right? Dash, right? And I think my VC fund wrote the first check, $250,000, and they were growing really fast. And then this big billion-dollar fund from the US comes in and says, we want to invest in this startup in Ghana, right? Because it was one of those really great stories in Ghana at the time. Nigeria has so many great stories, the Flutterwave, Moneypoint, Paystack, but it was just a great story in Ghana and Dash at the time. And then the minimum they invest, that billion-dollar fund, the minimum investment they make is $30 million. That's the minimum. So they reached out to our VC fund to say that, oh, we like this company, want to invest $30 million. And they're like, that's the partner, the GP, Idris. And, he tells us the stories during our LP meetings to say that he told them that this company is not ready for a $30 million investment. They don't have the structure in place that we think that, would accept this kind of funding. And this is someone that invested in Flutterwave before he became Flutterwave. This is someone that invested in Andela before he became Andela. So they know these things, right? And the company said, well, we still like the company and want to invest. And guess what? They put in $30 million in this business. But guess what Idris did? So he decided to take an exit, 8x of his investment. So I think he sold about 80% of his shares and left the 20% there. So he got 8x on the $250,000 check and took the cash, right? I said, okay, fine. If you guys want to take the risk, it's fine. We'll sell 80% to you and we'll leave 20%. In 2 years, that company shut down. Why? We found out that the founder had actually fraudulently inflated numbers to be able to get that $30 million investment and grow that valuation, because there was just this craze to become unicorns, right? And we see that happen a lot. And then But, like I said, good, bad, because he's taking the 80x return, right? And 20% is left on the company shutdown. And then, when he's telling us the story, I'm like, Idris, how did you know? I mean, why would you just say, I think this business has something great here. If a $1 billion fund wants to put in $30 million in this company, he says, because we've seen it all the time. That company cannot accept $30 million. It was too much money at that point, at that growth stage of that business, right? And he took his money, and we got an exit. And we're good, and we're fine. But also knowing that even the big companies can make mistakes, right? You don't need $30 million, right? So also knowing that you have to understand your finances as a business and know at every stage, how much capital do I need? This is how I think about it. If I want to grow my business to, maybe I'm at a $100,000 revenue business right now, and I want to grow it to $1 million. What do I need to grow this business to $1 million? And is that something I can self-fund, or can customers pay for it? And that's one thing a lot of people don't realize. Your customers can actually fund your business. Or, if I want to take on debt from a bank, what is required to do that? And then when you think about it in those terms, and you think about the amount of money you need, that's the only thing you should focus on. Don't think that, if someone offers you 2 or 3 times, I can take it. No, you don't have the capacity to take it, and you probably run into trouble. Yeah.
Thank you so much. Thanks. So we're just going to open up and see if there are any questions. I know it's after lunch.
I hope my stories didn't scare you. You can ask questions about your business as well. Yeah. And, so that we answer specific questions for those in the room.
Do you have questions?
Yeah. Fabulous.
Hello. Don't worry, I'm not about to set you up again. You mentioned that we are not asking for more. So I would like to know, how do we find out, how do we know when to ask for more? How do we know what exactly we need to ask for to be able to scale our businesses? Because sometimes we are not asking for more because we are scared. People have been brought up to be scared of taking out loans that I don't know how to pay. And so even when the business is going and you know you need money, you ask for what you think you can pay back. But I hear you say you can ask for more, maybe to be able to scale better and be bigger. So is there any sort of determinant factor of what to ask for, how much to ask for, and when to ask for it?
All right, great question. So I think it's the same thing around knowing your business, your industry, your sector, and then what stage of business are you at, and knowing your numbers, so critical, because when you know your numbers and you've probably built your business up to a certain stage, you can see that, okay, if I take this amount of money and I pay back, I'm able to pay back and grow this business, then maybe I can do more. Right? And I understand as women, we're naturally risk averse, right? Who was I speaking to? Yes, it was you, to say that, one of the things I've learned about myself is I'm actually less risk averse when it comes to investments, or when it comes to adventure, or like doing things like zip lining. You won't find me there. You probably find my friend Veronica there. So I am usually more adventurous with money. For some strange reason, I don't get it, right? I guess there's some programming I need to look into, right, Rebecca? But, so if I wanted to give like real terms, for instance, my dad runs a medical clinic, right? And I look into his numbers and I say, okay, we're at the point where you are serving this number of customers on a regular basis, right? If we do some marketing and we want to double the amount of customers that we serve, you won't be able to serve everyone. So do we buy this whole dental machine and everything? What is the cost of that machine? Now, that's an asset, right? And that asset has to be used. So it's a question of if you are serving this number of customers per day and this number of customers per month, if I bring in a new similar dental setup or equipment to the one you're currently using, can we double the number of customers that you have in this? Because we have to be able to pay back the money on that asset. We might not even be taking on external funding, but I have to see a good return on that asset as this one is providing, right? And those are the questions you ask. And we actually did it. My dad set up a different clinic bought a different equipment. And then we started to see that because he was in a different location, he was not making as much money as the first. So he still had that customer loyalty from the first business. He was still growing that business. But we started to see that, okay, that other business, we had to start from scratch again, build the entire customer loyalty and everything. So seeing that, it was like, okay, it's a good thing we didn't take external funding, because if we had taken external funding, we would have had to share that we're not getting the returns that we thought we would get. So sometimes you also have to understand the dynamics of your industry and your sector, which is why I'm trying not to be too general, but saying that you also have to think, it's a numbers game. It's always about your numbers. Everything is always about numbers. When I think about your business, I want to understand your numbers. What's your revenue line? What's your margin line? If I bring in this asset, what does that do to your margin? Does it help your margin? Does it make it more efficient? Do you get more customers? If your revenue line increases, does your expense line also grow in accordance to that? Because if you grow your revenue by 100% and your expenses grow by 80%, you're probably still stuck with the same margin, right? You're just serving more people. So it's about playing around with numbers. And these days you have AI. Put your financials, your bank statements into ChatGPT or Claude and ask Claude, analyze my business. Tell me, are my numbers working? If I take on these additional assets, I mean, you have the tools in your hand right now. You don't have to look for an expert, right? Just literally take your bank statement or something, or your financial statement, and put it into AI. Of course, they say you should be careful about the data you put on AI, right? But if you have your own account and everything, you can try it out. Or take out your name and just like ask in third person, right? And say that if I take on this investment, what do I need to do? What are systems and structures I need to put in place? That helps a lot. So don't go into those decisions blind. Don't take on additional funding blind, right? And especially if you're in the real estate space, for instance, and you want to build, and you want to get into a new project, for instance, and you want to buy this, I always say start small first. Start with one apartment. Don't just start with 100 apartments at once. You probably might fall flat on your face. It takes a lot at that level. Start with one apartment, learn the dynamics of that sector, of that space, understand it. And then, of course, surround yourself with women that have done bigger things. So they will know things, they will see mistakes that you're making before you do. So always surround yourself with people with that kind of expertise. And it's always a numbers game. And I think that's one thing I want to see more women understand. Your business is about numbers. It might be sentimental to you. It might be something you love doing, but it's about numbers, right? And your numbers have to make sense.
Okay, sorry, I have to ask a follow-up question. Sometimes we think we have the numbers and we make projections, but somewhere down the line we realize that maybe we overprojected or underprojected. I hear you saying that we can take the services of maybe professionals. But sometimes, even with the professionals in play, projections are made and they don't reflect the true outcome of things because, of course, dynamics change every time. And if you're trading or doing business with an external fund, the pressure of, will I be able to pay this back, could have an adverse effect on your business. So I think my question again will be, how do we mitigate these under projections, and how do we try to not let the pressure push us to making wrong decisions?
So I think at this point, you're looking for answers that I can't provide. Honestly, if I had answers, if we all had answers to those questions, we would be building massive business. But I think it's okay to also be fine with things you don't know. I think a lot of times we're so scared and afraid about some things, and it's tough to accept, but you will make mistakes, right? You will make mistakes. Like I said, it's always understanding who you were at that point of making those mistakes and learning from it. And maybe make sure that, or just in understanding how you make mistakes, make sure that those mistakes are not so big that you fall flat on your face. But if you do fall flat on your face, get back up. I mean, that's one thing my mentor said to me when I was going through that state in my business. And she said, you know what? Don't bury your face in the sand. You are going to get through this. You're going to learn from it. All of those lessons you're going to take forward, and it's going to make you a better businesswoman. And that's what I keep to heart every day. This is making me better. It's not going to destroy me. I'm still standing, and it's making me better. So I think that approach works as well. And we need more women mentoring people and sharing that they've gone through these things in their businesses as well and how they went through it, right? How did I cope at that time? So for instance, one of the things I will share with you about my business is one of the things I'm grateful for was during the time where my business was actively earning revenue and income, I was building a portfolio for my business. So I had an investment portfolio. My business also had an investment portfolio, creating additional streams of income. So when I went through that crisis, my business wasn't actively earning revenue for 2 years. But guess what? I never stopped paying salaries. I never stopped paying salaries and shutting down. In fact, 1 or 2 members of my staff had to leave because we're not doing anything. And what kept me during that time was the fact that I had a portfolio, additional streams of income outside of my business. So I diversified my streams of income in my business, right? I had investment in bonds, I had investment in real estate for my business, not just myself now. And that continued to pay the expenses for my business during that time. Now, if I see anyone now, I can share that story with them. Did I know that I would go through that? No. But it was something that my mentors and members of my advisory board told me to do. It didn't even make sense at the time because I could have been spending that money and living my life, man. But I was just doing it. And that saved me during that season and that period, right? And it's something I always teach people in your business as well, build additional streams of income, right? Because sometimes if it's just that one stream of income, you'll be so scared because that's the only thing you're holding on to. So seek diversification in your business as well, right? You have a stream of income in your business, build an additional stream of income, get into a new sector, get into a new industry, partner with people, right? Partnerships are also one of the ways we don't realize can actually also grow your business and scale your business. Right?
Thank you very much.
I'm a business lady. There's this one thing that I struggle with. I don't know if it's about me or it's some formula that I need to have. There comes to a point when you've just opened a business, and before you go very far, you get this other bigger opportunity or some very promising opportunity comes up. Even before you break even in your new business, you get this new opportunity that looks very rosy, and you tend to go slow because, it's said that you cannot move very fast. Scaling, you should scale when you're already comfortable in this one space. I struggle with that because whenever I see a new opportunity, I want to go for it. And sometimes I feel the voices around me telling that, Debbie, you need to slow down, just settle in, make money in this one before you move ahead. But sometimes waiting also makes you lose an opportunity. Is there any space or any timeline as to when one should expand or scale? Can you scale very fast?
So I don't think there's a formula for doing business, right? And specific situation will probably help here. But I do think that it's really good to deepen your business in a particular sector first before you expand, right? I mean, because if you think that, I'm doing this business and I'm doing great here, have you explored the full capability or capacity or extent in which you can earn income in that business or that sector at that time before you get into something else? Now, that said, if you see an opportunity, right, and it's something that you can consider and won't take too much of your time or won't require any new resources or any new skills or any new capacities to do, you can probably try. And then maybe in trying and doing it, you realize, this is also something I can start doing, right? But like I said, focus is also a really powerful thing in business. Focus is really powerful in business. I mean, for me, when I started to build my investment community, for instance, people get asking, why don't you do this? Why don't you do that? But I wanted to deepen this. And in deepening that, I started to build on, syndicating for the stock market, to real estate, to VC funds. If I just jumped to the other thing, I probably wouldn't have explored the full extent of what it takes to syndicate and keep growing that. Now, at the point where I've reached the point where I'm like, I can get into something else. Still the same principles, but I can extend into something else. So at its core, your business is about a core service or product. Now, are there other industries that you can extend that to, or those skills to? Are there other things you can tap into? And that said, it's also understanding that we're in an age where artificial intelligence is probably going to get some people out of their jobs or their businesses really fast. So you don't want to be stuck in a space that Claude is going to bring out something tomorrow that leaves you looking like, oh, I thought I could do this, but now Claude does this in seconds. And my husband was telling me an experience. So my husband is like a cloud architect, data migration, where you would migrate millions and millions of data. And he was telling me recently that typically when you're migrating data, you have to ensure that the system you're migrating to is the input. It matches what you're putting into the other system, matches what you're taking out of the other system. I hope I'm saying this correctly. But and typically when you have an issue, when there's a red flag on an issue, it's something that you can spend days on or nights on. So they always do this at night because you don't want to, when it's live, you want to make sure that you're not affecting people's service when you're doing a migration. And there was an issue, like 8 million units of data. They realized that there was an issue there because it was not migrating. And typically that will have taken him time using the Excel sheet. But guess what? He took the format that he wanted, the new system wanted, took the current format, put it into Claude, and Claude gave him in minutes. You know, he sat down there thinking like, oh my God, what's going on? In minutes, he had the data that he wanted to migrate in the right format, and he put it into the system, and it worked in minutes. This is so, I mean, he's been in this industry for over 2 decades. And just understanding that made him start thinking, like, I have to start thinking differently about what I do, right? So sometimes you also have to think about that in context of what's happening, the trends. If I move into this and I leave this, is this something that will get easily replaced, or do I have the skills? So it's knowing that, okay, you have to be very conscious of the industry and sector you're in to round this up. If I try this with my current complementary skills and resources, not that I have to get new resources or get new skills, can I take this into another industry, or can I extend my business in this way? If you create another stream of income, it's fine. But if you have to step out of your business entirely, you have to ask if your business is at the level of growth that you cannot continue to grow. I hope that helps.
Super helpful. Thank you so much. Okay. I think we have asked quite a lot of questions. Is there anyone else? You can always just catch up with Tomie at some point. I think for me, every time I sit with Tomie, I'm like, okay, why is my notebook not here to write down? Because it's just a wealth of knowledge and sharing that happens. And I know that this is not the end. We're going to have you many more. Maybe honorary Rwandan citizen, at some point. But thank you so much for this. We really appreciate you coming all the way just to be with us here and just sharing with us at this, session. I know we're going away with a lot of thinking, and you just mentioned a lot of the questions coming up now. People are asking you, what should I be doing? Definitely the appetite is whet, which is what we came out here to do. And so, yes, to building. Yes, thank you so much.
Thank you, Christine.
Great.
And thank you, everyone. Thank you for staying on. Thank you.
Thank you.
Susie, please welcome on stage.